Okay, so this week the stock market got completely obliterated due to the tariffs that Trump introduced on Wednesday. So in this video, we're going to look at Trump's tariffs and its impact on the economy and the markets. So this week, the stock market got completely obliterated, and it's no secret that the cause for that obliteration was basically the tariffs that Trump announced on Wednesday. It doesn't matter what section of the market you look at, there was no safe haven, there was no place to hide. If you look at the Dow, you can see it's down tremendously. The S&P was down by an equal amount, and the Nasdaq got completely obliterated, down over 10% just this week. And that was after, a series of losses both last week and over the last couple of months here. So, we really have a situation that is really affecting not only the stock market, but the bond market. But the bond market is a little bit different because we had a flight to safety. You can see the 10-year finished, around, it was floating around 390. I don't know where it finished today because I'm recording this before the market closed, but it made a move down from 430 to like 390. So that's a very big move for the bond market and indicates a flight to safety. But what did Trump actually do here? Okay, this is a very radical move that he made. He's been talking about it for years. He's been talking about it since the 80s. And he's been very consistent in saying that many of these countries in the world, including some of our best trading partners, have been ripping us off for years, and the politicians and the leaders of this country have done absolutely nothing about it. So what did he actually do? He did a 10% tariff across the board on all countries trading with the US, and then he did something called reciprocal tariffs, meaning that to the extent a country was charging us high tariffs, they would get a reciprocally high tariff, and for the countries that were charging us lower tariffs, their tariff would be lower. And as you can see from the chart, there were different rates for each country. It approximated half of what the country was charging us is what we're charging them. So he was arguing that we're being very lenient and no one should really mind so much that we're charging these tariffs. Well, one of the points that Trump makes, which I think I agree with, is that if you go back to NAFTA, which was passed by Clinton in the 90s, you can see that systematically since that time, since this free trade agreement called NAFTA was passed, jobs exited the country, and he claims, and I didn't independently verify this, but he claims that 90,000 factories have been basically shut down since NAFTA was implemented. So it's not that he doesn't have good reason to do this, but a lot of people might question his methods here, which seem to be extremely radical. Now, what is the effect of these tariffs? Well, the effect is going to vary by country. And, as far as I see it, our main trading partners are Canada, Mexico, China, and Europe. So those are our main trading partners, and therefore it'll have the greatest effect on those trading partners with the United States. And also, in addition to different countries, different sectors of the economy will be affected either to a greater or lesser extent. Different industries in the stock market will be affected to a greater or lesser extent. For example, if you are a company like Nike or really any clothing manufacturer that manufactures the clothing overseas and then you import it into the country, all of these companies will be affected, and therefore their stocks got totally pummeled. Also, tech, which we talk a lot about on this channel, tech will be severely impacted because a lot of technology, chips, electronics, things of that nature are produced overseas and then imported into this country. Cars is another example. But in the area of technology, I thought this clip was interesting. Dan Ives of Wedbush, never heard of it, but he's a frequent commentator on CNBC. He had some, I thought, very interesting comments on how it's going to affect tech and the Mag 7, and if these tariffs remain in place, it's going to be financial Armageddon.
It's essentially an economic Armageddon. You know, if these tariffs stayed in place, and I think the reality is talking in front of a microphone in the 202 area code is a lot different than the reality of moving the supply chain. And I think it speaks to our point that when you look at China exposed names from Nvdia to Apple, you have to assume that these tariffs don't hold in their current form. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through. And to that point, I don't think a lot of companies even give guidance on their 1Q conference calls, given what we've seen in terms of the head-scratching tariffs. The thing that you really have to focus on in terms of like what demand destruction looks like in terms of when it comes to AI revolution, data center build out, inventory, and then of course you start looking at consumer focus, names like Apple in terms of what that means for iPhones. The reality is if you want an iPhone made in the US and you want that for $3,500, we should make it in the US. If you want it for $1,000, you keep it in China. So I think these are all the issues that investors are trying to sort of game out. I mean, this is as nervous as I've seen investors going back to COVID March 2020.
And what is really astounding is that the Mag 7 stocks, which are the largest technology stocks in the stock market, lost over $1 trillion in market cap just this week. So a lot of people, both that I've talked to, and I would imagine a lot of people out there watching this video right now, are very, very concerned about their stock portfolio. And what does this mean? Should you be selling? Should you be buying more? Should you just be holding pat? And many people who have large amounts of stock exposure in their retirement accounts are very concerned, especially if you're older and you're getting close to retirement. They're very concerned about the values of where the stock market's going and therefore the value of their retirement funds and what their future might be. So I think we have to take a look very critically at what's going on here and what the possible outcomes are. Now look, Trump has assembled a group of extremely intelligent, extremely experienced business executives to be in his cabinet, unlike, and I'll contrast this with the last Democratic administration, which had a bunch of clowns and political hacks in these very important positions. Bessent in Treasury is a billionaire. And last time I checked, there aren't too many dumb billionaires around, especially those that are self-made. If you've inherited it, you could possibly be dumb and be a billionaire. But most billionaires that made the money on their own are not dumb people, okay? These people are extremely intelligent, especially when it comes to the economy and money, okay? And virtually everyone he has in these critical cabinet positions, like Howard Lutnick, for example, again, another billionaire, ran Cantor Fitzgerald, very successful Wall Street firm. These people are very smart people, and I believe, regardless of what the media might tell you, I think Trump is a very smart guy. These guys are not stupid. Obviously, there's a strategy behind this. I don't think most people understand what the strategy is, including most market analysts and including apparently most traders on Wall Street. I don't blame them for selling. I don't blame them for panicking, because when you don't understand something, fear comes into the picture, and a lot of times you panic and sell. However, let's take a critical look at what's actually going on here. First of all, knowing Trump's past and knowing what he's like personally, I think a lot of what's going on right now is nothing more than a negotiating ploy. Now, I know a lot of people have said that that's not true, even some people in his administration, but I think that's a lot of BS. I think he's pushing a hard line here. He's backing our trading partners like Canada, Mexico, China, the EU into a corner and forcing them to do something, whereas in the past presidents have just, kind of asked politely, could you please lower your tariffs? And that obviously hasn't worked. So he's using blunt force instead of a scalpel here. But I think you have to realize that a lot of this is a negotiating ploy. And why is he using this as a negotiating ploy? Again, my opinion, I believe that he realizes that none of these trading partners, given the strength of the U.S. economy and the strength of the U.S. consumer and their ability to buy all of their products, not one of these trading partners has the ability to sustain a prolonged trade war with the United States. We're running huge trade deficits with all of these countries. Their economy is completely dependent on selling their shit to us, especially China. Okay, China couldn't survive without selling us their cheap crap that they manufacture, as well as, you know, some of the other items that they manufacture, which, by the way, are very needed by us, like medicine. Okay, and I think Trump is very smart and very accurate when he says, you know, if it came to some kind of military confrontation, they could basically shut off our supply of vital medicine that's needed for the people of the United States. This is a horrible position for us to be in, and the leaders of this country never should have let this happen. So he's confronting challenges that are very real, and people shouldn't make light of it. The second thing is the U.S., as compared to many of these other countries which are export-driven, like China, we have the advantage that we have a real economy. And when I say real economy, I mean we have a very deep economy that has many different layers. We have many different industries where we produce things, and we're probably more self-sufficient than any other country on the planet. And we are one of the few countries that really has a true middle class, notwithstanding what happened in the Biden administration with the inflation and everything that was killing the middle class. We still have a middle class that has the capability of buying products and having a real consumer-driven economy. This causes us to have a trade deficit with other countries because they're supplying us with many of the goods and services that we do buy. But by the same token, it also makes them completely dependent on us. And Trump correctly perceives this leverage that he has over the other countries, and is really the motivation behind why he's doing a lot of this stuff. Now, I don't want to minimize what's happening now. We are having the worst financial sell-off in the markets since COVID, and it is very serious to valuations. However, I will say that I think the market is still overvalued. It was at ridiculous lofty levels prior to the sell-off. Now it's still in the low 20s in terms of forward earnings on the S&P. It's like a little bit over 20. You know, historically normal valuations are like 18. So the market is still overvalued, okay? If we go into a recession, okay, which it is, I think, more than likely that we will, the market could sell off another 20%. Okay, so be prepared for this. Okay, you got to be in a defensive position right now. Okay, now is not the time to be a hero. If you have long-term money that's exposed to the stock market in retirement accounts and things like this, and you're young, don't worry about it. This will blow over. This is a bump in the road. And once all of these countries capitulate and make a deal with Trump, the market's going to come back, so don't worry about it. But if you're an older person and you're relying on the money you have in your savings for retirement, then you should be a lot more defensive in what you're doing now, and you know, not be a hero and buy on the dips right here. I think you need to keep a relatively high level of cash, and at some point in time you can go back into the market, but for now I would be cautious. The market will recover from this, okay? Our trading partners will capitulate and make a deal, okay? So don't don't panic and sell now if you're in good names. Okay, if you're in shitty names, yeah, sell, but if you're in high quality names like the ones that I recommend, the great technology companies, the great growth companies, the Costcos of the world, don't sell those best in breed stocks, because this thing eventually is going to work itself out. We may go into a recession, but don't forget, if we go into a recession, it's not the worst thing that can happen, okay? A recession would wring out the excessive speculation that we've seen in the stock market, the crypto market, and the residential home market, and it would also break the back of inflation, okay? That resulted from excessive monetary policy and unbelievably reckless deficit spending of the Biden administration, okay? A recession, while it sucks while you're going through it, could be the best thing that ever happened to the economy long term, because if we can iron out these issues with our trading partners, create a more level playing field, increase the manufacturing in this country, create jobs, and incidentally lower taxes, which is another objective of the current government, we could have a very strong economy, a very productive economy, not one that's driven by government spending like what we just recently had. And I think young people will be able to afford homes again. Interest rates will go down. Interest rates are already going down. Houses will become more affordable. Goods and services will come down in price, and we might all be a lot better off, and the stock market's going to recover. So anyway, don't lose faith. Don't bet against the U.S. economy, and everything is eventually going to be fine. But we're going to go through some rough patches here, and I hope you got some value out of this content. If you did, please like and subscribe, and stay tuned to this channel for more content on the markets and current events.